Hey guys, thanks for jumping back into the cryptoverse. Today we're going to be going over Bitcoin. If you guys like this content, make sure to subscribe to the channel. We try to look at things in a different way than you'll find on most other channels. We look at things in a macro level view typically, and we also look at different ideas rather than just pulling out the same trend lines over and over again on a day-to-day basis. So here we're going to be looking at the price of Bitcoin on a logarithmic scale, and we're going to be plotting it versus time. And if you guys like these charts, make sure to join the Telegram channel. We have a little over 1,300 members. We have a lot of great discussions in there, so feel free to check that out if you want to dive in further. But what we have here is we have the price of Bitcoin on a log scale versus time. And one of the things I would note is that what has happened in this last market cycle has not really happened before. You can note that here we had our capitulation and then an accumulation phase, and then a run-up of 4x basically. And then now we've retraced back down, and in prior cycles, once the bull market got in full swing, we really never saw a 50% correction. We saw maybe 30%, or maybe a little bit higher, but we really never saw 50% corrections. Now, one of the ways that I look at bull market and bear market, and just try to elucidate my sentiment on the matter, is that when we are below the 20-week moving average, it's more indicative of a bear market, and when we're above it, it's more indicative of a bull market. Right here, where we jumped out, that was actually corresponding to going above the 20-week moving average, and over here we're actually holding it as resistance as I speak. So the consideration here is, what is the market doing, and why does this look so different than what we saw last time? Last time when we had our capitulation candle, Bitcoin, it accumulated for quite a while before going on up, and you can see that it wasn't monotonically increasing on the way up, but it's not like we saw these huge 50% corrections like we have now. So if you can imagine, if Bitcoin were to have done something similar last time, it would have accumulated, and then it would have gone up way up here, and then it would have come back down. So what has happened over here? So basically, it seems like we got, after this last 2017 bull market, people were a little bit eager to jump in once prices started really moving. I think a lot of people got burned because, this was somewhat premature. Now, what if we were to just try to consider the price in a slightly dubious way? I'm going to admit it's not, nothing is a perfect science here. We're just trying to understand things on these longer term trends. What if we were to just draw this line across the page and note that this area and this area look fairly similar? They're not exactly the same, but if you were to integrate this area under this reference line, so if you were to just get the area under the curve and then the area above the curve here, they're actually more or less the same. Now you can actually see this better on a linear scale. So while we only went down 3,000 here, so from this center line we went up around 8,000 over here. However, we did not spend nearly as much time in this region. So what I've done basically is I've supposed that I've often said that short-term price moves are irrational and you can't really make heads or tails of them. Looking at the macro level picture, each of these run-ups and corrections, all of them, ultimately each one of them is, you can't really predict that well. They're somewhat irrational based on whatever's going on during the time. What we can look at is more of these macro level trends over the long term. So what if we were to take, more or less, not quite, but more or less, well actually yeah, more or less the last year of price data and manipulate it in a sense to look at a better average of the price. So what I've done is, if you look here, you can see, if we were to take this price here and then add it to this price here and then divide by 2, what if we treated that as our new price? Okay, well, what's the point of that? Well, what if we kept doing it? What if we, we say that this move here was somewhat irrational and this move over here is somewhat irrational? Now, I mean, there are going to be some reasons you could say. I mean, we tested the 200-week moving average here, just like we tested it here. But this drop was actually quite significant, going from like 6,000 down to 3,000, and staying between 3 and 4,000 for quite a while. Now, what if we just kept doing it and we then added this price to this one divided by 2, this one to this one divided by 2, and then eventually, we get to some point, and we have to start, going, backwards and dividing the price by 2, because we don't ultimately want to keep moving out forever and adding on prices and then dividing by 2, because then eventually, you're taking a price above the center line, let's say over here, and you have no more reference points to compare it to. So at some point, we backtrace and look at the other half of the curve. So essentially, take this one, add it to this one, divide by 2, add it to this one, divide by 2. You're somewhere over here. You're taking this price, adding it to this one, dividing by 2, and so on and so forth. And so here's a different way to look at it on a linear scale. I don't typically show linear scales, but if you want to visualize it, here it is. And then if we do that, this new price is the red line. So this is what maybe the price is more representative of, as opposed to looking at this huge downtrend where we had this accumulation phase down here, and then this irrational bull market in the middle of a time that should otherwise be accumulation. Now let me take off the other one and show you just that curve. So that's what it would have looked like had our price been averaged out a bit. And basically this is just taking out those irrational short-term price moves. Now, the reason why I like to show this or think about it in this way, and this is not obviously it's not based on some real science that we can then, bet everything on. I mean, this is not financial advice. It's just to look at how much longer we might be spending, during this accumulation phase. And this accumulation phase is more or less this phase between, say, 3,000 up to around 10,000 or so. And considering that Bitcoin, we're hoping that it goes up to around 6 figures. If you're getting in between 3 to 10,000, then it seems like a fairly decent price to get in at. Now, of course, buying at 3,000 is much better, because if you buy, let's say you buy 3 Bitcoin, let's say you have $9,000 and you're able to get 3 Bitcoin for $9,000, then if Bitcoin were to go to 100,000, then you'd be at 300K, whereas if you buy it at 10K, you only get, or 9K, you only get 1 Bitcoin. So it can make a really large difference in the long term. But that's why you just dollar cost average and you don't worry about what the price is doing exactly. So what this kind of shows is a different way to look at it, and showing how this is we're basically in this accumulation phase for a longer time than we would have been over here, and ultimately what I think we're I don't think we're gonna be shooting up to 6 figures in 2020. I don't think we're going to be getting to 6 figures in 2021 either. But you can imagine that the price, what I think would more or less follow this trend here, where we maybe continue to stay in this region and we just slowly build our way up out into, say, sometime in 2022 or 2023. I don't think that we're gonna just pop right back up to 100K in less than 2 years. And I think that's already evident, because at this point during the last market cycle, so the 20-week moving average has historically been what you consider, or what I consider, to be the bull market, and we're below it right now. And in the last market cycle, the 20-week moving average would have already been held as support, because we would, if you rewind the clock back 4 years and look at 2016, we were above the 20-week moving average. Okay, here we're below it, and I think that does make a big difference. I mean, just for market sentiment, being below the 20-week does make a difference. And even if we were to pop above it tomorrow, we would then have to confirm that we're going to hold us as support for weeks to months before anyone could claim that the bull market has arrived. Because we definitely popped above the 20-week over here, but then when we came down and held it as support, we didn't really hold it. We came down to it, we held it for a few days, and then we fell below it. and we fell below it. It was around 10,000 at the time. Now the 20-week moving average is around, it's a little over 8,000. So just keep these in mind when you're talking about or looking at macro level trends. So one of the things I've gotten a lot of comments on are this idea between, say, the 4-year cycle and a lengthening cycle. Now, I am of the opinion that we are on a lengthening cycle, and it is not just measured, as some people have suggested, it is not just measured from peak to peak. If you were also to look at, say, the bottom from here, after this run up to this bottom, it was actually about a year shorter than from this bottom to the bottom over here. And I know some people might arbitrarily take some point over here and say that's the bottom. But I mean, to me, it's a little bit dubious that you're just taking some random point over here when really Bitcoin, I mean, the price existed. Bitcoin was at least being traded at various places since, before we actually have reliable price data. And I think just taking some random point like over here and saying that that is the trough or the valley of that market cycle, and then measuring it to that one, while I'm not going to say it can't be in hindsight what actually happened, I think it's just it's a little bit dubious to say that we are on a 4-year cycle, because if you look at this price or at this valley here and go to here, it's not 4 years. Okay, I mean, you can look at it. I mean, here we're almost in 2012. So let's just say shortly before 2012. So then if we were to go out 4 years, we would expect the next valley to be shortly before 2016. So we would have expected it to be way over here. But in fact, the capitulation candle was over here, not over here. And in fact, this was after a long accumulation period and going into the bull market. So keep that in mind. I mean, this accumulation phase lasted for the better part of a year. So I guess theoretically it depends on when exactly you consider to be the point you want to draw to. But if you're, from a mathematical sense, if you're just drawing it from the low to the low, this is about a year shorter than from this low to then the low we saw over here. Now remember, this this price date is different. So let me go here. So this low here to here is different. You can see we're almost in 2012, whereas this one is in 2015, sometime early 2015, and not in at the end of 2015. So I think there is a distinction there. And then so if you were to basically go from here to here, it's more or less 3 years from this point to this point, and then this point to this point is 4 years. So I'm still not entirely sure why there are a lot of people that are so hard pressed that to say it's a 4-year cycle, it has to be a 4-year cycle because the valley to the valley shows that it's a 4-year cycle. Well, I would argue that that's not necessarily true. I mean, if you want to take some random point over here and say that that's the valley of the cycle and then draw it to this point, you can do that. But mathematically speaking, I don't think there's any evidence that would point to say that this is the valley or this is the valley of this cycle. It just doesn't make a whole lot of sense to me. And in fact, there's a lot of other evidence as well that I put out there. I mean, I published a 21-page report that looked at 10 different things, probably at looking at how things are lengthening, the time to see these diminishing returns the time to get those diminishing returns are increasing as well. We looked at the time to double your investment, triple your investment, or all the way up to 100x. We looked at trends in that. We've looked at just market cycle trends, using the entire cryptocurrency market cap. We looked at logarithmic regression, obviously noting some of the limitations there. And, one of the things that I would like to point out is that any rational person, I feel like, would be hard-pressed to completely discount any theory. I see people out there that'll say that 4-year cycles can't exist or lengthening cycles are a myth, based on, one piece of evidence that they want to harp on. I think it would be prudent for anyone to consider the fact that no one actually knows what is going to happen. I mean, I think that the lengthening cycle has more evidence for it, which would put us seeing a new peak out in 2022 or 2023. But at the same time, I don't discount the fact that it could happen in 2021. And if it does happen in 2021, just be prepared for it. It's that simple. I mean, just don't get too committed to one thing over another and just implement some form of risk management, and you more or less can't go wrong. I mean, the only way that you would really go wrong is if the entire cryptocurrency asset class just tanks, and you have these positions in various coins that then go to zero. I mean, that obviously don't invest more than you can afford to lose. Do your own research, and this is not financial advice. I mean, obviously that is the case for any video. But I just wanted to really clarify that if you're someone that takes the position that price has to get to a certain level or the next valley has to be at a certain time, then you're essentially limiting yourself. You're constraining yourself, and you're applying this bias in your mind to what future price action could be that could ultimately, affect your ability to make rational choices. Because you might think, well, if we're on the 4-year cycle, then that means the next bear market has to occur in, the next bottom of the bear market would have to occur in, say, late 2022 or something. Which, that could be the case, it might not be the case. Don't get too attached to any one theory. That's the entire point of this channel, is we look at the evidence, we try to make rational conclusions, but we don't marry any specific theory. We try to keep everything in perspective. And that's why I try to make videos fairly regularly, so that we can continue to look at more and more evidence. We look at other coins. This is not strictly a Bitcoin channel. While I do post primarily Bitcoin stuff, we also like to look at other coins, because I think the market is larger than just Bitcoin. I think there's room for other coins other than Bitcoin. So, keep all of this in mind. We're not attached to any specific theory. We just look at the evidence, and if things go in a different direction, then we'll just pivot our strategy. It's that simple. Nothing more, nothing less. So again, I'll leave you with this figure here. Consider this just a longer accumulation phase, and treat 2020 like an accumulation year. That's what I'm doing. You can treat it however you want, but if just as I mentioned at the beginning of 2019 to a lot of people in various chats, 2019 was likely to be a good accumulation year, and I also think 2020 is going to be a good accumulation year. So if you understand the risks, you understand what's involved, and you understand how to manage your portfolio, then I would say keep accumulating, and keep your eye on the time frames between 2021, 2022, and 2023. Because while I don't think 6 figures is going to happen in 2021, it doesn't mean that Bitcoin can't get to 20,000 or 30,000 in 2021. I think 2021 is likely going to be a good year. But for now, let's just, we have our plan. Let's stay the course. Just, keep accumulating. If you see the value in that. If you want to keep accumulating, do so. When the risk level gets to a point where we might want to consider dollar cost averaging ourselves, then we're going to do that too. And just subscribe to the channel if you guys want to follow along. If you want to dive in deeper and have more access to stuff, I also have a Patreon channel that you can check out. That's in the description below. It's just patreon.com/into the cryptoverse. So I post more regular updates there, if you can believe it. But I think that will wrap up this video. Sorry for the rant there, but I just really wanted to clarify my position on things. And I would love, I would love for us to more or less not become, this type of thing where you have these sects of people that are determined one way or another what's going to happen. We're all in this for the same reasons, more or less. We all, we want to see a good return on our investment. We're also more likely here. Many of us are probably here because we do see the future value of blockchain technology, and want to see it have an effect in our world, and see the world a better place, 10 years from now than it is today. As they say, don't trust, verify. Verifying is an important thing to do, and blockchain allows us to do that. So With that said, again, I appreciate everyone's support. Feel free to comment below. But if you really want me to have more of a response to you, and if you want to engage with me more, remember to check out Telegram or Discord. All right, guys, that's it for this video. Bye.